Hi, this is Charlie giving you Monday's market commentary and I hope you're very well. Before we go into the actual market commentary, just wanted to run through some training elements with you. Firstly, we have the trading competition which we've been running with ETX Capital, and that is going to finish I think at the end of this week actually. So if you're involved with the trading competition and you've got your demo accounts and you're trading that, then at the end of this week we'll get in touch with ETX and ask them to tell us the top three accounts that were being traded, or the top three performances that we've seen. So we'll let you know next week as to the winners of the trading competition. So if you are involved in that, then you've got 1 week left to smash it out of the park. So yeah, just as a reminder there on the trading competition, it's been very good of ETX to give us those accounts. In the meantime, if you've not traded with ETX before, then by all means go onto our site and have a look at them. They're a good broker. We trust them as a spread better. You get a lot of spread bettors out there that you don't trust, and there's a couple out there who are good, and ETX are one of them. Right, okay, so let's go into some training, because I had a question come in from a trader this week who said he wanted to know how long does it take to become a consistently profitable trader. And I said, okay, well, that's a good question. I said it's a question that a lot of traders want to know, but the only thing is, well, it's almost like saying, well, how long's a piece of string, because you don't know the individual circumstances of that trader, i.e. how long have they been trading for, how frequently do they trade, etc., etc. There'll be numerous questions. So the first question I asked was, well, how long have you been trading for? And he said he's been trading for about 6 months, April of this year. So I said, okay, and he said that his trading had been pretty much flat. So he said win 1 week, lose another week, win 1 week, lose another week, that sort of thing. So it's essentially his account is going sideways. So the first thing I said to him, which he probably wasn't expecting, was I said congratulations, because if you can be trading for only for the first 6 months and you are going sideways, then it tells us that you're doing a lot of things right. So although to a trader you're thinking, yep, I'm not getting anywhere, but you're learning and you're gaining experience, and really in the first 2 years that's what your job is to do, is to gain experience, try and make some money obviously, but learn from the experiences that you have. So that's great. So if you're already going sideways, I said, well, what it takes in order to stop this cycle from happening, it just tends to take just a few tweaks to break out of that cycle and to then start seeing your P&L just continuing to go up, with obviously pullbacks, but not just going sideways the whole time. So it's usually just a few tweaks on the trading. Sometimes it could just come down to little things like risk management, trade management, and obviously a little bit of psychology in there as well. So I think it's just worthwhile remembering, if you're one of those traders and you say, actually, that's me. I essentially have some nice good spells, then I give it back, and good spells and give it back. What you need to do is go over your trading diary. If you don't keep a trading diary, then you're not going to be able to learn from this process. So you must record your trades and go back over your trading diary and do it on a regular basis in order to fathom out, okay, what's the pattern here? What is it that I'm doing that's not what's happening during these troughs? Now, obviously, on some of these, there's nothing wrong with what you're doing at all, because obviously, just not all trades work out. But if it's just a continuous pattern, then there's probably something there which is affecting your ability to really break out. So it could be you'll see the pattern within your trades. So it could just be, like I said, the risk management, trade management, whatever. And sometimes it could just be, do you know what? I'll have, let's say I'm having a number of trades. So let's say there's 10 trades. Let's just get rid of the pen and bring it back on again. So let's say you've got 10 trades in total. Oh, no, I don't want the box, I want the pen. So you've got 10 trades in total, but what you find when you go through them, you say, well, actually, 3 of those trades were sort of boredom trades, because I was a bit bored. They weren't following my rules. I sort of adapted my rule structure in order to take those trades, and then out of those 3 trades, maybe 2 of them were losers. Well, that means that out of that 10, then you've got 3 trades which you probably shouldn't have taken, of which 2 were losers. And this is when you really start to nail down where the problem is within your trading in order to break that cycle. So it's the subtle things. The first thing we always say for a trader is go sideways, and if you're going sideways, you're doing something right. It's just those subtle things that you may be doing wrong. So it doesn't always have to be trade management, position management. It could just be a little bit of just taking those trades through boredom or through whatever else that you probably shouldn't have taken, coming outside of your plan. It could just be, you know what, I trade the S&P a lot, and I trade maybe the DAX a lot, and you know what, today I decided I'd go and trade euro dollar, and it's that sort of thing. You go and trade a completely different market which is alien to you, and you jump around, or you switch to gold, or you switch to oil, and so you have to look at those things as well. Look at the markets you trade. Which are the markets that you're most profitable on? Because you may find that, you know what, I'm just not as profitable when I trade gold or S&P or euro dollar. Look at all of these little patterns, and they will present themselves. It's all there within your P&L, and if you do the work on your P&L, then by going through your trade diary, then you'll be amazed what can present itself. So there you go. That's my little tip for this week on diary management, and for traders who might just be going sideways, saying, okay, how do I break out of this pattern? Okay, so let's go into the markets themselves. Let's start off with the S&P. Actually, put a pretty decent turnaround in this week. One thing we've got to be a little bit careful of is obviously the volume. It's a low volume week last week because of the bank holidays over there in the US, but you can't deny that it's been a strong price action week. Now, with the S&P, it's nice to see that it's had a nice run, but obviously we were right at these prior lows now, this whole congestion zone here. So we still need, for the S&P, for us to be positive, we still need to get a couple of closes really back up above the 50-day moving average. So at the moment, if anything, there'll be lots of sellers coming into the market as we approach prior areas of supply exhaustion. So one thing to look out for there. But you can't deny it's been a good run, and if we can get back up here, then yes, okay, we break that seller exhaustion zone down there, and we start really breaking out, and there'll be lots more buyers starting to come into the market. So it's got a bit more work to do, but yes, it's been a nice week for the S&P. So just be a bit careful, because we are into prior lows here, and there may be a little bit of profit taking going into the early part of next week. But we'll see. Great week. It could just be down to light volumes. That's what's pushed it up so much. But certainly, if it can get above the daily 50, then we're back on for retest of the year's highs. Okay, let's have a look at the euro dollar. Now, the euro dollar, if we were looking at our intermarket analysis, we would say, wow, the euro dollar has already got back up above its 50-day moving average. So that's a great sign, and so euro dollar's obviously had a nice strong week as well. Let's go out to a weekly chart just to put this in perspective. Well, we'd started to roll over, hadn't we? But look at this 50-week moving average. But we never really we started moving away from it. But we've turned straight back around, put a little spinning top down there, turned straight back around, and we're back above that 50-week moving average. Well, as a lot of you know, then if we're just clawing our way along a moving average, then at some point we're going to break out in the direction of the same direction of the move prior to clawing our way along that moving average. So the prior move was up, we're clawing our way along the moving average, which would suggest that the next move, the secondary move, will be to the upside as well. For a while there we thought it was going to fall over, but the way it's coming up looks very encouraging. So obviously back to the daily charts. Let's take us back here. We'd like to see price get up and reach these highs again, but certainly at the moment the price action is encouraging, and we certainly need to start looking up towards these prior highs as very short-term targets, and then for the potential at some point, if we reach these highs, I don't know if we'd break out straight away, but certainly be looking at some point for a breakout. Yeah, we've only got one day close above this at the moment, so anything could happen yet. We could close straight back down again on Monday, but certainly so far so good. Cautiously optimistic. If we can see a bit more decent price action, then we're definitely going to say, right, this overall pattern on the weekly charts looks good for a breakout. Okay, let's have a look at the pound as well. Now the pound's been a little bit weaker than the euro dollar, as you can see. So and we've got this old trend line in play here. If I can put that on roughly there. So we've got this trend line to contend with, but I suspect that cable may want to overall break through that. And I think that if I could actually draw this on slightly differently, and it's probably already in the early stage of trying to break through that. So again, cautiously bullish for these currencies at the moment. There's a little bit of some hurdles to overcome, but cautiously bullish, and we could end up having a really nice run into the end of the year. So I think that's something you need to be aware of, or we all need to be aware of, really. Oil. I thought I'd have a quick look at oil because it's been so sloppy for such a long time, but it's still range bound. But again, if oil can get above its daily 50, then we could see a bit of a run on oil going into the end of the year. And gold we haven't looked at for a while. Now gold again is turning up, has turned up. Let's go out to the weekly chart, and it tells us that okay, we've done a nice pullback. Next targets are back up to the 1790 zone, but overall we keep on challenging that zone, so it looks good for if we do get up to 1790 that we'll go for a breakout anyway. So looking good there. Anyway, that's the end of this. It's already 11 minutes in. Have a fabulous start to your week. Kim will be back in touch on Wednesday.